Welcome to today's market report.
European stocks ended flat on Thursday as declines in travel and leisure limited gains in miners, while ending the month with falls of over 3% on worries about a slowing global economy and higher inflation. The Pan-Regional Stock 600 index was 0.05% lower, with miners rising 2% and travel stocks falling 2.2%. The European stocks benchmark ended September with losses of 3.4% after a 7-month winning streak, as a surge in government bond yields drove investors out of high-growth sectors such as technology into economically sensitive banking and energy stocks. Recent market moves suggest that a rotation is underway in favor of those sectors and assets that benefit from a consumption shift from goods towards services. Given that we do not expect rising interest rates to have a damaging impact on the real economy over the coming 12 to 18 months, we recommend that investors maintain a moderate overweight allocation to stocks. A growing number of risks, including hawkish stance from the US Federal Reserve, supply chain constraints, and Chinese property developer Evergrande's financial troubles, have weighed on sentiment this month, even as investors bet on a steady European economy. Defensive-heavy Swiss market is among the biggest decliners this month, while banking-heavy Spanish and British indexes remained buoyant. Among individual stocks, Sweden's H&M was 3.4% lower after the retailer said supply disruptions hit sales in September. Spirits maker Diageo plc gained 1.2%, hitting a record high after it forecast a boost to operating margins as people opt for premium brands. The company Diageo did say that cost pressures were rising, but that for the moment they were manageable, helping to push the shares to a new record high that must be worth raising a glass to, according to CMC Markets. British online fashion retailer Boohoo tumbled 15.1% as it warned that freight inflation and higher wages for its distribution center workers would impact full-year profit margins. Crude oil WTI was up 0.33% at $75.08 per barrel. Brent was down 0.04% at $78.44 per barrel. Gold futures was up 2% at $1,757.50 per ounce. On the FX front, GBP/USD is rising for the first day out of 3, trading at 134.66, advancing 0.29% in the day. September and the third quarter are coming to an end. The market sentiment is downbeat as month-end flows and asset portfolio reshuffling weigh on in the stock market. Major US stock indices post losses between 0.13 and 1.09%. The BOX is falling around 0.04% with its US dollar index, which measures the BOX performance against a basket of 6 peers, currently trading at 94.33. The Office of National Statistics released the gross domestic product for the third quarter, which rose by 5.5%, better than the 4.5% foreseen. It is 3.3% below pre-COVID levels reached in 2019. However, the economy looks like it is heading in the right direction. Across the pond, the US initial jobless claims for the week ending on September 24th increased by 362k, 27k more than expected, while the 4-week moving average rose to 340k from 335.75k. At the same time, the US Bureau of Economic Analysis released that the US economy in the third quarter grew 6.7%, more than the 6.6% expected. On Friday, the British economic docket will feature the market manufacturing PMI for September. Regarding the US, personal consumption expenditure and personal income data could offer GBP/USD traders fresh clues. Cable is trading around 2021 lows, but bounced off 2021 new low around 134.10, sitting around 50 pips above. A daily close above 135.40 could form a tweezer's bottom pattern that could propel the British pound for higher prices. On the flip side, GBP/USD pairs still have more room to fall, with December 21st, 2020 low at 131.87. Eurodollar has been a real head turner this month, sliding from 119.09, the high for September, to a low of 115.62 on this final day for the month.
This is today's market news. Thanks for listening. We'll see you next time.